Hello, I'm Jay Bowman, Managing Director of Research at FMI, and I'd like to thank you for your interest in this, our fourth quarter forecast of construction spending put in place for 2018. As we close out the year, total construction spending should end up 5% for 2018, on pace with what we experienced in 2017. And this growth has really been led by three primary segments: transportation, lodging, and office, all three of which were up double digits over the past 12 months. Two of the lagging sectors, healthcare and multifamily, will still end up positive for the year at up 1%, but well below sort of the historical rate of inflation, which has been roughly 3%. As we turn our attention to 2019, things do begin to slow down a little bit. We're looking at probably growth around that 3% range, again, in line with what we've seen from an inflationary standpoint. So why are we expecting that slowdown in 2019 down to about 3% compared to 5% for 2018? Well, this is really answered in what I believe to be two parts. First being our non-residential construction index. This is basically a sentiment survey that measures things like backlog, project pursuit, and other similar indicators of the health of the industry. And as you can see, a score of 50 is sort of our baseline. Below 50 would suggest that we're moving into a period of contraction, whereas a score above 50 would mean continued expansion. And over time, we've seen the score start to decline this year, down to 52 roughly now, which is full 10 points below what it was just earlier this year. The other thing we look at are several different economic indicators, and the yield inversion curve has probably been the best indicator of recessions in the country for the last several years. And it's starting to trend in that category that would suggest that the next economic recession becomes more likely within the next 18 to roughly 24 months. And if you expand that to all of the indicators that we look at, a full 2/3 of them are starting to move into that territory of moderate risk. As we turn our attention now to construction spending at the segment level, and even looking kind of further afield, as we're looking here at growth now across the next 5 years through 2022, a few things stand out. First, single-family construction, still the largest segment and has pretty good growth through the 5-year period. Again, this reflects a lot of the generational changes with the millennials moving into that prime home buying age and other things that factor into it. When we look at the highest growth segment over the next couple of years, transportation, a lot of that has to do with the urbanization effect, but also a lot of what we see with some of the most major programs and a lot of these transportation agencies in the histories of their programs. Take, for example, Los Angeles with their $14 billion expansion of the airport. Understand that construction at the end of the day is a local business. We start to look now at where do we see activity occurring over the next year and several years afterwards. First thing to keep in mind from a regional perspective is that three areas, the Mountain, the Pacific, and the South Atlantic, will all lead construction spending in the country over the next year. All three of these regions are looking to post a 6% increase in total construction, which is double that of what we see for the nation as a whole. Also, when you consider from a metropolitan region, we're seeing greater and greater urbanization, as we previously mentioned, and also when you take into account that just 5 metropolitan markets will represent fully 20% of all construction over the next 5 years. Again, we appreciate your interest in this, our fourth quarter forecast of construction spending for 2018. I encourage you to download a full copy at our website, www.fminet.com. And as we potentially begin moving into an area of weakened demand, I encourage you also to speak with one of our bankers or with one of our consultants about the impact on your business in the local sense, and also to help position your company for future success.